let's take a look at some of the activity we're seeing right now and what's propelled this market higher in yesterday's session.
Thank you very much and good morning. Yesterday's session was just a correction of what we've seen for the first trading days of the week. On Monday and Tuesday, the market was down, but yesterday we saw the market was up by 107 basis points. After the profit taking that we saw on Monday and Tuesday, the valuations are firmed up and created an entry opportunity for people that want to also take advantage of the valuation we're beginning to see and to ride into the growth story of the Nigerian Stock Exchange.
Well, it's not just the profit-taking that seems to have been working against this market for the better part of this week. We've had most of the banks also planning to close their exposure to the margin market as well. So let's explore the kind of pressure that's been exerting and what your outlook on that front is.
All right, thank you. The CBN has mandated all banks to close the exposure to margin market and to reduce the exposure to margin as a percentage of their loan to maximum of 10%, which some of the banks are already doing now. So that may also have an impact on the prices of the stocks, as they may be willing to sell and will put pressure on the price. But let's not forget also that the result we are beginning to see, mostly for the banks, which constitute like 45% of the exchange, and even for the fast-moving consumer goods, are beginning to look up. The profits are going at a very good rate, which may also enhance the valuation indices of the companies and make a good entry point for people that wants to buy into the Nigerian stock market.
Babatunde, all of this happening in a context where we've had Nigeria's SEC sack the Director General of the Nigerian Stock Exchange. It's also suspended the NSC's president over governance concerns. Run us through what the market's making of that noise that has emerged and the fact that they're saying that it will be announcing an interim administration sometime this morning.
Well, we'll take it from history, from what has happened. I would like to go back history lane to 2008, when the market was about going down. The market attained its peak on March 5, 2008 at like 63 basis points for the exchange, 63,000 points. When the market was going down, we recall that the exchange and the management of the Nigerian Stock Exchange tried to manage the exchange in a way that to prevent the falling of the price or the correction that the market needed at that point, which eroded the confidence of mostly the foreign investors that provided the liquidity in the market at that point, leading to them exiting the market. By July, August in 2008, we found out that most of the foreign investors in Nigeria moved out billions of dollars, which now led to the free fall of the exchange. I would say the removal of the NSCDG it will be a welcome idea, as it's going to boost the confidence of the foreign investors. Let's not forget also that we've been clamoring, both investors and analysts have been clamoring for more disclosure on the part of the companies that are listed on the exchange. We've been clamoring that things should be brought, all the rules of the exchange should be at par with what's obtainable on the international best practice. So we believe, but we will be waiting to see who is going to be appointed as the acting DEG and the pronouncement the acting DG is going to make and the impact it's going to have on the market. But overall, we are positive that this is going to lead in the right direction of the market in restoring the confidence and providing liquidity from the foreign investors.